Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Massar and Tim Stenovec on Bloomberg Radio.
Hi, everyone. Welcome to the Bloomberg Businessweek Weekend Podcast. Carol is off this week. In her place, though, we had a great rotating crew of co-anchors featuring Nora Melinda, Emily Grafeo, Katie Greifeld, and Isabel Lee. Another busy summer week. We've got global tariffs and how that's affecting U.S. companies' supply chains, plus Fed independence and job security for Jay Powell. Also a hefty dose of earnings as banks kicked off Q2 reporting, the latest economic news, and crypto week in the U.S. House. We get into all of that a little bit later. Plus, rare earths in focus yet again. We speak to the CEO of MP Materials on the company's multi-million-dollar deal with the U.S. government to boost output of rare earth magnets stateside. All that to come. We begin, though, with the biggest will he, won't he story of the week. Speculation over the fate of Federal Reserve Chair Jerome Powell set off a short-lived tempest in financial markets on Wednesday. That volatility was mostly quelled after President Trump said he in fact has no plans to fire the central bank chief and was only discussing it in concept. Still, the president's remarks left open the possibility of ousting Powell, a credible threat that could end the Fed's independence and demonstrate the president's power to shake up global financial markets. For more, we turn to one of the few people who actually had experience on the Fed. Lael Brainerd is the former vice chair of the Federal Reserve and former director of the National Economic Council under President Biden. She says any break from Fed independence would be, quote, extremely bad.
I think there's a lot of continuity. He has clearly been very frustrated for some period of time with the Federal Reserve and their wait-and-see mode while they wait to see how tariffs are going to affect inflation and the economy. And, you know, he's very impatient to see rates come down. So I saw those comments as being certainly in that same spirit, although, of course, the rumors had more urgency to them. Of course, subsequent to that, he seems to have pulled back those comments, and that's a good thing. I think it would be extremely bad for the United States to have a big rupture in the institutional independence of the Federal Reserve, which is what that would amount to.
Exactly. So how do you think this will affect the Fed's credibility in controlling inflation? And more broadly, how will this political move really just affect inflation expectations?
Absolutely. So if the President of the United States were to go ahead and actually make an effort to remove the chair of the Federal Reserve, that would fly in the face of decades of institutional convention that puts the Federal Reserve in an independent position to pursue the control of inflation as well as keeping labor markets strong. And I think it would really raise important questions in the minds of investors in the United States and around the world as to whether the institutional environment that really underpins the value of Treasury securities, the strength of the dollar, and the expectation that inflation will remain low and stable in the United States, all of those things, I think, would be thrown into question. And that should lead investors to demand more to hold long-term Treasury. So that should lead to the long end of the curve going up.
Whenever the Fed chair gives a press conference, he's asked by journalists about the criticism that the president has made or is making about him. You've worked with Jay Powell for years. You know him. In your view, how does he feel about being this punching bag?
So I don't know how he feels personally, but I know that anybody in that position would feel that they have an important institutional responsibility, that he was confirmed by the U.S. Senate, that there is a legal set of expectations regarding the Federal Reserve Chair's role. And of course, monetary policy is set by a committee. It's not set by the chair alone. And so it is the Federal Open Markets Committee that has continue to hold on rates. So it's a much broader institutional environment, and personalizing it by this relentless focus on the chair, I think, is extremely problematic. Again, bad for the United States, and ultimately defeats the purpose that I think the president is trying to achieve, which is to see rates go down sustainably in an environment of growth and low inflation.
When you look at the history of political pressure exerted upon the Fed, I'm thinking Nixon, Arthur Burns, is today worse? Is today different? Or are they more or less the same?
So I think that the past episodes where we've seen a lot of pressure on the Federal Reserve Chair to lower interest rates for political reasons have ended extremely badly. And we've seen in those episodes high inflation, and the Fed has really struggled to bring inflation back down. So I think this is a kind of similar set of pressures to what some Fed chairs have felt in the past, but not in the recent past. I think during the period that we have seen low and stable, what they call the great moderation, low and stable inflation, there has been a real understanding that the president, the administration should allow the Federal Reserve to conduct monetary policy in a way that establishes their credibility on inflation control. So this is a big change relative to the last 3 decades, and it's highly problematic. The president has said very explicitly that he wants to see the Federal Reserve lower rates because every percentage point that rates come down, this is what he says, it will save him $300 billion in interest payments on the national debt. And of course, that's more important than ever now that we've just added, through the mega law, another $4 trillion to the national debt. And so when you hear the president talking about this, he really seems to be very focused on those interest payments. And that is exactly the kind of institutional environment that would undermine the credibility of the Federal Reserve in fighting inflation, and could actually lead investors to demand higher interest rates on long-term treasuries.
That's the great irony in this whole situation here. We have 20 seconds left. I just want you to make a prediction. Do you think Fed Chair Jay Powell will fulfill his term as the chairman of the Federal Reserve until May of next year?
I certainly hope so. And yes, I do.
All right. Lael Brainerd, thank you so much for joining us on Bloomberg Businessweek Daily. That is, of course, Lael Brainerd, former National Economic Council Director, former Vice Chair of the Federal Reserve, Distinguished Fellow at the Georgetown Soros Center for Financial Markets and Policy.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App, or watch us live on YouTube.
Sticking with the president's threats to oust Jay Powell this week, we turn to another expert on the central bank who spends a lot of time interviewing members of the Fed. Michael McKee is Bloomberg News international economics and policy correspondent. Mike joined us from the Rocky Mountain Economic Summit in Victor, Idaho. It's an event that brings together some of the country's top economists and policymakers.
Well, actually, Tim, there's a bit of an eye roll going on with a lot of people because we've been through this so many times with Donald Trump, and the whole idea of taco came up again. So nobody was surprised when he came out and denied the earlier reports that he was ready to fire the president, perhaps as early, fire the Fed chair. But the general feeling has been, and we talked about this a lot at dinner last night, that the president won't do it because it doesn't get him very far. It would probably lead to a steepening of the yield curve, a widening of spreads, the dollar falling. and interest rates would go up rather than down in the markets, and it would just create a lot of confusion and hurt the Fed's credibility. It would also end up in court. So he might try to remove the Fed chair, but it would take many months of legal maneuvering to get that far. And really, Powell doesn't have that much longer to go as chair.
You said that there was a little bit of eye rolling because this is sort of a movie that we've seen before. Let's take a listen to the rhetoric from the president just over the last few months when it comes to the chair of the Federal Reserve.
And the fake news is saying, oh, if you fired him, it would be so bad. It would be so bad. I don't know why it would be so bad. So we have a stupid person, frankly, at the Fed. I call him Too Late Powell because he's always too late. I know within 3 or 4 people who I'm going to pick. I mean, he goes out pretty soon, fortunately, because I think he's terrible. I'd love him to resign if he wanted to. He's done a lousy job. Jerome Powell's been very bad for our country. We should have the lowest interest rate on earth, and we don't. He just refuses to do it, and yet he's spending $2.5 billion rebuilding the Fed. He's a terrible Fed chair. I was surprised he was appointed. We're not planning on doing anything. We're very concerned.
That was President Trump over the last few months, his rhetoric around Fed Chair Jay Powell. It's in chronological order, and I want to point people to the part just before the last soundbite where he said he's spending $2.5 billion rebuilding the Fed. Mike, is there any there with this new line of attack when it comes to this renovation?
Well, there are questions about why the renovation has gone up from $1.7 billion to $2.5 billion. And I suppose those are things that could be investigated, and Powell has asked the Fed's Inspector General to look into it. The Fed's response so far has been that these plans were approved in 2021, and obviously right after that we had a big inflation, and so the costs of everything have gone up. They have also argued that a lot of things that the administration is focused on, or some of the administration officials who've tweeted about it are focused on, are things that are actually not in the final plans. And so it doesn't appear that there's a lot there. Is it enough for cause to fire a Fed governor? That would be up for the courts to decide. And as I said, that would take some time. So I don't know that that's a big deal. In that string of Trump quotes, I would also point to the one where Trump said, "I was surprised he was appointed." Well, Trump appointed him as chair.
Yeah,
good reminder.
Tim is eager to make that point. He did also express surprise that Biden renominated him, President Biden. I do want to get your thoughts, Mike McKee, on the idea that, okay, his term as Fed chair ends in May 2026. We know that. We also know that his term as Fed governor doesn't end until January 2028. We had Treasury Secretary Scott Bessent join Bloomberg Television, and he said that would be very confusing for markets if Powell did stay on as a governor until January 2028. What does the precedent look like there?
Well, there really isn't a precedent. The closest you can get is back in 1951, the Treasury-Fed Accord, where the Treasury Department and the Fed agreed that Treasury would handle fiscal policy and the Fed would handle monetary policy. And the Fed chairman at the time stepped down. President Truman appointed a new chair, but the old chair stayed on for a couple of years as a governor. But it wasn't a matter of standing up to the administration at the time. He was actually asked to do that, to lend his experience. In this case, this would be a completely unusual situation. The only close analogy I could come up with would be Paul Volcker, who faced a rebellion among his fellow board governors. And the Reagan White House told him, "We think this means you need to go." And he did resign. But it was a kind of different situation than we have right now. So this would be, as Scott Bessent said, a completely confusing mess for the markets, particularly if the president appointed someone he's seen as a toady to him that would just try to lower interest rates regardless of economic conditions. The next thing that would happen would be Governor Powell would offer a speech and it would get massive coverage, and the markets would be torn between which ones to believe. It's also, and this is important, Tim and Katie, to realize that the Open Market Committee that sets interest rates selects its own chairman of that committee, and it doesn't have to be the Fed board chairman. So the president could appoint Kevin Hassett as the Fed board chair, and the Open Market Committee could just keep Jay Powell as its chair. And so interest rates wouldn't be any different than they are right now.
All right, Michael McKee, we're going to have to leave it there. Michael McKee, Bloomberg News international economics and policy correspondent, is out there in Victor, Idaho.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
One company that's certainly been on our radar as of late is MP Materials. In fact, the company's also on Apple's radar. This past week, Apple announced it would commit to a $500 million deal with MP for its rare earth magnets. News of that deal led the stock of MP Materials to surge 20%. Adding to the surge was this month's announcement that the U.S. Department of Defense wants to make a $400 million equity investment in MP, along with $1 billion in financing from JP Morgan Chase and Goldman Sachs to fund a major new plant. This, of course, comes as the U.S. continues to secure domestic manufacturing of these critical supplies and push back against China's grip on them. James Litinsky is the founder, chairman, and CEO of MP Materials. He joined Carol and me alongside Bloomberg News economic statecraft reporter and mining and minerals expert Joe Doe on what the DoD investment means for the company and for the industry.
There are three pillars to DoD's investment. DoD made an investment in MP. They also provided us with a long-term, a 10-year price floor contract that allows us to earn a fair return on the commodity. And then they also provided a 100% offtake for a new magnet facility that we're building that will significantly expand. It will 10x our magnet capacity. What's so important about this is that with the supply chain, as you may have heard me say, if we have all the rare earths in the world, if we don't have the downstream, if we don't have the magnet production, or vice versa, if we have magnet production but don't have the rare earths, then it's all for naught. And so it's really important to look at this supply chain on a vertical basis. And so you really have to credit President Trump and his administration and of course our partners at the Pentagon for sort of looking at this challenge and recognizing that MP has put together a vertically integrated champion, and the best solution to kind of catalyze this supply chain is making a substantial commitment to us, which they've done. We're very excited about that. And lastly, I would just say that this is a huge win for taxpayers, because the structure of the deal is such that not only is DoD now economically our largest shareholder, but they have upside participation in both the commodity and in the magnet business.
Hey, Joe, come on in here because you understand this space like pretty much nobody else. Talk to us about what you see as significant about an investment such as this, especially from a position of economic statecraft.
Well, I wanted to ask Jim about that. Jim, I feel like you're underplaying. Can you give us size and scope, put into context, why this is such a big deal in your industry and what's unique about it?
Thanks, Joe. It's good to see you. Well, I think not to get too wonky, but I would recommend, since we are on Bloomberg, for those in our investor relations, we obviously put out a deck, and I really encourage people to look at that. And we go through a lot of the economics, but I'll give you the summary, which is that we have totally transformed MP's business overnight. We've gone from, the challenge, Joe, as you know, is that the Chinese historically have sold rare earths at a substantial loss because they use it mercantilistically as a strategic source of control of the downstream.
Which is a way of saying, Jim, that they will flood the market to take market share, which is one of the things that has always scared investors away from your company and other companies in this space.
Correct. And so if you look at the math, we basically have transformed MP where we can earn, we have long-term contracted cash flows. So we have 10-year agreements where essentially, if you kind of look out normalized, we believe we can do 650 million plus of EBITDA. And this is, and again, look at the various parts, but this is taken our business from what was sort of a volatile commodity business to a long-term contracted economic platform, which enables us to make further investments downstream. And those investments downstream, we now have 100% offtake in DoD as a customer. And if I can, Joe, let me add one more point that I think is so important, because you hit the nail on the head about the Chinese flooding the market. The Chinese very thoughtfully realized that particularly when we think about physical AI and the future of warfare, robotics, drones, the Chinese are willing to lose billions to play for trillions of dollars of downstream market cap. And when we think about our great leaders in technology, whether it's Jensen Huang or Elon Musk, talking about robotics being potentially the largest industry in the history of the world. Rare earth magnets are important, very important, extremely critical feedstock to that. And so we've got to preserve that trillions of dollars of downstream enterprise value. And that obviously is what we're about at MP, is making sure that our downstream industry has that feedstock and obviously ensures that we can make those investments.
Jim, the Defense Department is famously not splashy about anything. It's hard to argue that this was not flashy. $400 million equity investment in a publicly traded company. Have they ever done this before?
I think it's a pretty unprecedented situation, and I think that this is obviously a very unique circumstance. And obviously, we are honored and humbled by it, Joe. And as you know, since we've been talking for many years, I guess there's the old expression of it takes a lifetime of hard work to become an overnight success. We've been at this for 10 years at MP. And I think that DOD and the administration realize that we've got to look at the supply chain holistically. And hopefully this is a model for future other scenarios where we have strategic industries that we have to return, and we've got to figure out a way to take on mercantilist economics. And so this is, I think, hopefully a good model in doing so.
So Jim, to that point, you operate in a specific portion of sort of the rare earth space when it comes to these magnets. In your view, because you're in this space, where does the U.S. still lag, and where does the U.S. need to invest in order to try to catch up, if even possible?
Well, we're vertically integrated. So we at MP, and there's nobody like this in the world.
But I just mean from a materials and processing perspective. I understand you are vertically integrated, but what about for all of the rare earths that will be in demand in the near future?
Sure. Well, so there are two major categories. There are the light and the heavies, and as part of this announcement, DOD is actually also committing some capital for us to build out samarium separation at Mountain Pass. Samarium is a feedstock into a different kind of magnet that's actually really critical for military purposes as well. And so, essentially, Tim, if you want to refine rare earths, so forget the ore bodies around the world. If you want to refine and separate them to then become feedstock to magnets, there are two places to do it. There's sort of the Chinese sphere of influence or Mountain Pass, California. And so I think this basically catalyzes us to move downstream and really be able to have MP as an economic platform that can encourage additional investment, really in all spheres, in mining, and across the stream all the way down to magnets.
Jim, I think people are listening and they're like, yeah, if we're thinking about developing our supply chains here and creating national security for things that are so important to so many different aspects of our lives here in the United States, people are going to say, yeah, this makes sense. But do you feel like this is potentially a step towards you becoming a state-owned enterprise?
Oh, not at all. Not at all. In fact, I think it's actually the opposite, which is for the first time, we see an actual data point of how we in the West, with free market capitalism, can take on mercantilism, but doing so in a way that is along with our value system. So let's be very clear about this. DOD is becoming economically our largest shareholder, but they are, they will vote with our board, and they expect us to be a thriving public company. They want us to continue to run the company for shareholders. And obviously their interest will be a benefit for taxpayers to the extent that we continue to compound, which we expect. And then they also have upside sharing. And so I want to really remind people that if you look at this deal, it was a win-win-win. Obviously, the market likes it. I think our economic platform has totally changed. But we're serving a key national security initiative, enabling trillions of dollars of downstream enterprise value to be more secure. But the taxpayer also has upside in this. And so I think that this is sort of, again, it's a new model. It's unprecedented in a sense, but it's, of course, because we're facing a challenge that we haven't faced before.
Yeah, I guess on some level, Jim, the upside the taxpayer has is if your stock goes up, the investment that the DOD has in it goes up. I was talking to an investor today asking about this, and I said, well, what does it mean for the taxpayer? And they said, really, all it means is a better bet on national security issues. So I might push back on that.
If I may push back, because and if you look at the structure of the deal, it's not just the shareholding. There are three pillars. It's the shareholding. There's then upside participation in the commodity. And then there's also upside participation in our magnet business. So there's actually 3 different mechanisms of upside sharing for the taxpayer.
And can you clarify one thing in the details? Yeah. The agreement, it's $130 floor, right? Or is it $110? Sorry.
$110.
It's $110 floor. That is just for the actual concentrate, refined, and metal. That is not batteries, right? Sorry, that is not permanent magnets.
That's all NdPr products. So you're right, concentrate, oxide, and metal.
So it's
and then
commodity.
When you move downstream, though, we also have 100% offtake for the new facility that we're going to build called 10X. And as part of that offtake, we'll have a minimum EBITDA guarantee, and then there'll be a catch-up for DoD, and then we'll share. We're 50-50 partners. And so again, Joe, this is a transformational public-private partnership.
Right.
But the taxpayer was really well represented in the structure.
But Jim, one thing, you probably will be getting a lot of pushback from investors, from media, whoever, saying what we just brought up, which is your biggest stockholder will be the Defense Department. And doesn't that bring a concern that the federal government has so much say in what is supposed to be a publicly traded private company?
Well, actually, interestingly, as part of our deal, DoD will be voting their shares with our board. And so I really think that this is, again, it's a new structure that contemplates the fact that we need to be a successful public company. So this is very different. I know that maybe there's, historical examples of where the government needed to come in and rescue an industry. It's actually the opposite of what's happening here. The government wants to achieve an important national security objective. And we at MP are able to help them achieve that objective. And so they are going to help support us in accelerating investment in our space, and they're going to create the conditions that allow us to invest with a fair return on capital and not be attacked, so to speak, by mercantilism. And in exchange for that, they're going to expect some upside. And so again, I think hopefully it's a new model that we can utilize across some of these verticals that are really challenging for us, where we've been unable to fully reshore industries because we're facing competition that is thinking differently. Again, go ahead.
Sorry, we only have a minute left, and I just want to hear from you how this deal came together and the timeline here. Who did you speak to? Who first reached out? Trips to Washington, trips to Chicago or Nevada? Like, how did it all come together, and when did the discussions first start?
Well, we've been having a great active dialogue with the Pentagon going back to the first Trump administration and through the Biden administration, and now obviously the Trump administration. And obviously this is a nonpartisan issue, getting this supply chain back. Suffice to say that what we have been, as you know, in our mission, we've been focused on this single point of failure since the inception of the company. Post-Liberation Day, as we saw the Chinese utilize rare earth magnets in the trade disputes, that basically the cutoff of rare earth magnets had the threat of sending our economy into a deep tailspin. And so that really certainly accelerated some of this discussion.
Got to ask you, though, did you actually talk with President Trump about this? Like, who finally said, got to do it, signed it?
Well, I think you can look at the transaction documents, which were signed at the top levels of the Pentagon. So this was a conversation from the very top levels of the Pentagon.
Is that a yes on Mr.? Is that a yes on the president?
Yeah. So this is again. I don't want to specifically name names of who we spoke to and how the conversations went about. But again, how about this? I will tell you that the president has directly mandated that we fix this supply chain. And so that is public. You can see that. And so the president mandated the secretary on down to fix this supply chain. And I think that this is really bold and decisive action to make that happen.
Well, investors certainly taking note. As we said, your stock up 50%. I'm going to say thank you, because there's 3 of us, and we really appreciated your time and having a conversation with you on this, because it does sound like it's pretty significant in terms of what happens with rare earths here in the United States. Jim, thank you. Stay in touch. Jim Litinsky, he's founder, chairman, and CEO of MP Materials, and of course our own Joe Doe, Bloomberg News economic statecraft reporter. Joe, thank you so much.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App, or watch us live on YouTube.
Back in April, Levi's was one of the first big apparel companies to report earnings after President Trump announced sweeping tariffs. Since then, a number of its competitors, such as American Eagle and Gap, have flagged the tariffs' impact along with general consumer caution. Wall Street expected a similar fate for Levi's. But instead, Levi's actually announced its revenue outlook to rise between 1% and 2% for the current fiscal year, above the average analyst estimate, and up from a previous view that sales would decline 1% to 2%. So is the head-to-toe denim lifestyle paying off? Levi Strauss Chief Financial and Chief Growth Officer Harmeet Singh expects momentum and consumer resilience to overcome tariff uncertainty. He joined us alongside Bloomberg News senior editor Nina Trentman.
We delivered a quarter two beat and we raised our full year guidance. A special shout out to our teams around the world for what I call delivering the power of the and, which is not only growing our direct-to-consumer business, but our wholesale business, growing our U.S. business and our international business, growing men's and women's, and I can keep going on. And that really explains the momentum we have. We delivered our third consecutive quarter of high single-digit growth and growing our profitability. And that is why we believe that we are stepping into the second half. We believe we can manage through the uncertainty of tariffs. The tariff situation is fluid. We assumed an incremental 10% on tariffs from the rest of the world and 30% from China. Our view is we are competitively in a better spot to manage through this. 60% of our business is international. We have a fairly diversified supply chain, and we've been agile over the years in managing through some of the uncertainties. We've got some mitigation actions, Tim. We are working with our vendors. A large piece of our growth is driven by higher volumes, and that makes a difference when you're negotiating with our tenured relationships over the years. We are driving higher full price sales because our product offers are working. And we are targeting some pricing actions with minimal impact to the consumer. To your question about 26, we are working through that. Some of the mitigation actions will continue. We believe the brand momentum continues. The brand has never been stronger. This year, it's all about center of culture, driven through music. We've got a partnership with Beyonce. We've got a partnership with different musicians around the world. Think Diljit Dosanjh in India. Think different influences in Europe, etc. Next year is
maybe I can jump in there quickly. We'll ask about the music partnerships in a second. Just wondering, in terms of earnings, of course, an interesting thing is happening right now. We were expecting tariff clarity by July 9th. Now we're hearing from the White House it's going to be August 1st, and that won't be moved. But of course, you are on the lucky side that you have already reported earnings. Still, at the same time, you gave an outlook. You provided commentary about what you're thinking about the future. And you're doing that in an environment where we're hearing tariff announcements from the White House basically on a quasi-daily cadence. How confident and comfortable can you be as CFO to provide forward guidance at this point, given that the tariffs are still such a moving target?
Yeah, a couple of things give us confidence, Nina. Number one, the momentum that we're entering the second half. It's been sustained over the last 3 quarters. The second is our product offers. The consumer so far has been resilient. Our customers, our wholesale retailers, are still buying our product, especially our new product. And because we are a global company, international, for example, has been fairly strong. So as we manage through the uncertainty, we are trying to do it thoughtfully. We don't take anything for granted. Our view is you've got to continue to earn the trust with our consumers every day. And, especially in moments of crisis, consumers tend to gravitate to brands that are relevant and also, brands they trust. And, because we have been around for 170 years, navigated different crises. That's really been the genesis of why we think we can manage through it. We talked about the impact, We talked about actions that we're taking to mitigate that. And more importantly, we are doing different scenarios. I mean, after earnings, when we received news about certain tariffs, we went back and game planned that through another scenario. So we're working through different scenarios. The other piece that gives me more confidence is the agility of our supply chain and our teams around the world. And, let me pause here. I hope that addresses your question.
Yeah, Harmeet, you mentioned a music partnership that we, of course, all know, Beyonce, and this was a really major deal for Levi Strauss. I mean, you mentioned the brand being relevant. I was just at the Cowboy Carter concert, and I look around, there's Levi's everywhere. How influential was this partnership to the company, and how much of an impact did it have on sales?
Yeah, it's been really important. We have had a relationship with Beyonce for decades. She's an icon. She's in the center of culture. And we're just privileged and honored that she chose us for this partnership. It's had an impact. Our women's business is on a roll. We have doubled the business over the last many years. The partnership really accelerated there. We are nowhere near done. We think we can double our women's business. Our women's business is about a little less than 40% of our business. When I joined the company 12 years ago, it was about 20%. We think that our women's business can be about, half our business. And I would say the partnership is important. Her styles and what she's wearing, they're selling really well. Take the Beyonce hat. I was in Europe, early June, and, I was hearing stories of consumers wanting to wear and shop the hat and the product before they went to the Beyonce concert. They come to our store. We have store managers who help customize the product. Emily, who runs our store in Regent Street is a great example. And so, from my perspective, building and coming up with these memorable moments for our consumers is what connects us with our fans and makes a big difference.
We should note Harmeet Singh, who we're speaking to now, is Chief Financial and Growth Officer at Levi Strauss. If you're listening on radio, he's dressed head to toe in Levi, but he's not actually wearing the Beyonce hat right now. So next time he joins us, he can shoot for that, Nina.
I'm sure he'd look great in it.
Yeah.
Harmeet, you talked about the importance of your supply chain. I'm curious to see what you're hearing from suppliers. We've seen about a 10% decrease in the dollar against major currencies around the world since the beginning of the year. Are you seeing any demands from suppliers to be paid in local currencies to not carry some of that currency volatility that has come with the dollar?
Yeah, no, we have tenured relationships. We source from about 28 countries. Relationships are deep, have been there for a long, long time. Currencies go up and down. There are times when the dollar is weaker, there are times when the dollar is stronger. And I think our suppliers, our vendors and our partners are used to that. So we're not seeing any pressure to change it into local currency because people have lived through, pieces. The more important thing is what goes into the production and manufacture. Cotton is a big piece, and cotton as a commodity has actually traded down, and that also helps offset some of the currency pressures. And because volumes have been a big piece of what's driving our growth, and we're thinking long, and and we believe we can sustain the growth at mid-single digit over a period of time. I think that's what helps us ensure that it's a win-win both for our manufacturers and vendors as well as the brand. And so I think that's how we're dealing with it, Nina.
So while Levi is focusing on direct to consumer, the wholesale channel is also growing, right? What kind of retail is specifically doing well for the company? Department stores or more so e-commerce?
Yeah, so it's the magic of the end. It's great to see our stores perform well, our e-commerce perform well, and wholesale. And, I mentioned jokingly within the company, it's a great trifecta on DDC. We're growing comp sales. We just reported our 13th consecutive quarter of comp sales growth. We're opening doors, so we're increasing our market reach. We have 3,200 doors right now. We're adding 50, 60 a year, and we're growing e-commerce in the mid-single digit. Beside all this, wholesale is also growing. And where DDC First really helps, Nora, to your question, our wholesale customers see the new product, which is introduced in our direct-to-consumer stores, see how the performance is doing, and in a lot of cases is working. And that gives them the confidence to buy into the product. So wholesale customers are growing largely because DTC is growing. They're seeing the product introduction, they see things working, and that makes a big difference. And also with our wholesale retailers, our relationships have been here for a long, long time.
Given the tariff uncertainty, are you having serious discussions about moving any production or more production, or any production, to the United States?
No, Tim. 98% of all apparel sold in the U.S. Is actually imported. So, that's not a conversation that's happening. We believe long-term the tariff uncertainty will clarify and settle well, where the consumer in the U.S., doesn't bear the cost of the incremental tariffs. And companies like ours, different apparel companies, continue to grow their businesses in the U.S.
Harmeet, always good to see you. Thanks so much for taking the time and joining us on Bloomberg Businessweek Daily this afternoon. That's Harmeet Singh, Chief Financial and Growth Officer at Levi Strauss & Company. Also, Bloomberg News Senior Editor Nina Trentman. She's the author of the Bloomberg CFO Briefing newsletter. You can sign up for it if you haven't already at bloomberg.com/CFO Briefing.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Plenty ahead in our second hour of the weekend edition of Bloomberg Businessweek, including the Shark Tank-like companies that are now feeling the bite of Trump's tariffs, and how stressed out, overworked customs brokers are now left calculating the bill for those with tariffs. Plus, how Binance aided President Trump's crypto firm. Then its founder sought a pardon. That's coming up later this hour. First, though, a pulse check of the state of U.S. manufacturing in the age of tariffs with one of the largest industrial supply companies in the U.S. Fastenal is a roughly $52 billion market cap wholesale distributor of construction and industrial supplies. Think nuts, bolts, screws, anchors, rivets, and other fasteners, as well as other industrial, janitorial, and safety supplies, and cutting tools. The company sells to builders, manufacturers, governments, and more, so it's got a great read on the industrial and manufacturing economy in the U.S. For a look at how the company is navigating tariff disruptions, Bloomberg Equities reporter Nora Melinda and I caught up with Fastenal CEO Daniel Florness.
We sell to a wide range of customers and industries, as you mentioned, across North America and in 26 countries in total, but mostly in North America. Our customer base has been relatively subdued for the last several years. In the fall of 2022, we saw some indicators saying it was going to slide, and we felt that as we moved into the second and third quarters of 2023. And it's been really weak since then. About 30% of our business is very production-centered business within manufacturing.
So are there any signs that that part of the business is improving, that those customers are seeing sentiment improve? Are you hearing anything from them?
I think the biggest sign that we're seeing is the knife has stopped dropping. We were trying to catch that falling knife for a 2-year period. When I talk to our district and regional leadership throughout the world, the feedback I hear is, they're not talking about this $200,000 a month customer whose business is off 60, 70%. You have a much more stability. Now, it might be stable at a lower level than it would have been 2 years ago, but it's much more stable, and so it allows our inherent growth to shine through.
So we've really been in this prolonged downturn, especially in the industrial economy. Are you seeing any particular green shoots or signs of inflection? And if so, which markets are you most optimistic about?
Yeah, so we're seeing some green shoots. For us, we are seeing some impact in energy. However, I would say that's probably more us taking market share than it is a lift in the tide. About 25% of our business is outside of the industrial. And within there, we're doing quite well. I hear a lot of commentary from our folks with data center builds, with even warehousing customers, and we've made really good inroads over the last 3 years into the government sector, and that primarily was an offshoot of COVID. During COVID, when supply chains blew apart, we stepped in to serve a lot of that market when they were not being served, and those folks have remembered that, and we've grown our business there.
So we need to, of course, talk about tariffs. How have tariffs really changed your thinking about product sourcing, particularly for fasteners, which we know, of course, are primarily sourced in China, Asia? What other options are you evaluating to mitigate the tariff impact here?
So back in 2018, we did some short-term moves of our supply chain, but it was fairly limited because you just can't change. There's so much QC involved with vetting out suppliers that you couldn't move it fast enough. What we had done quietly over the last 5-6 years is continue in that progress, because the tariffs that were put in place in 2018 were sticking, and we expected more of it to happen, and we wanted to better diversify the supply chain for our customer. We did look at a lot of options. There aren't a lot of options within North America. We looked at some options of doing some manufacturing ourselves. The problem is the economics still didn't work. So it was really for us more about diversifying supplier base in general.
Are the economics of that going to work now in this new tariff regime? I think during the first Trump administration, the goal was to move things out of China. But as many companies are learning right now, it doesn't matter if it's China, Vietnam, or India. If it's not in the United States, there is going to be a tariff on it. At least that's what it seems like is going to be the case.
Yeah, the economics still do not work. And part of the challenge there isn't just the economics, it's the amount of time. When we were researching it very in depth 2.5 years ago, one of the challenges is it's easy to find a site. It's relatively easy to get a building up and get a supply chain set up. When I say relatively easy, I mean time frame of what it takes to do it. The most challenging aspect was the production equipment, of how many months it would take to get that. And so that aspect really pushed us to look more at geographic dispersion of supply chain sourcing, because the economics are still very challenging.
So how much of what you sell right now is actually made in the U.S.?
If I look across what we're sourcing, what our branded suppliers are sourcing, we've always estimated less than 50% is coming from the U.S.
And is that going to stay stable in this new tariff regime?
I suspect it will.
Okay.
So I know Fastenal raised prices back in April, especially as a result of tariffs. Historically, I mean, the company has been able to pass on pricing costs. What's really been the feedback here from customers? Has there been much pushback in terms of the ability and appetite for customers, frankly, to take on additional pricing, especially as we head into the second half of the year?
First off, we sell into a very competitive market. There is always pushback. The real challenge in the equation is communication. And one thing that helps in our supply chain, we're directly sourcing from the manufacturer that's producing the product, more so than most of our competitors in the marketplace, just because of our scale. And so we have the ability to see into the future farther than a lot of our competitors. And it puts us in a position to communicate very well. It puts us in a position to take steps as the inventory is turning. The one unfortunate part of that, it also can create fatigue for your customer. And I would say our customer is at the fatigue point right now, of where it's become challenging, but it always is. And it's all about communication and trust.
I want to talk a little bit about the One Big Beautiful Bill Act that became law on the 4th of July this year. In the press release for your earnings, you did mention it, but big picture, what does it mean for your customers and for your business?
Big picture, what it means for our customers is, if you look at some of the depreciation rules and the timing, it makes it very advantageous to make capital investment. And so that's the biggest piece that we see impacting our customers, because our customers have, especially on the manufacturing side, an incredible amount of infrastructure that they're investing in. And so anything that allows them to depreciate faster and to improve their return profile is advantageous for our marketplace. And that's a key element that we talked about in the release.
I know that you talked a little bit about, to us, manufacturing your own products in the U.S. and your suppliers doing it. But I'm wondering about your customers and the way that these so-called America First policies might help them reshore manufacturing back to the U.S. Are you seeing any evidence or hearing discussion of your customers beginning to move manufacturing back to the U.S.?
I would say it's fairly limited, but again, that's not something that happens in 6 months that you set up. We've had some customers set up assembly operations, which you can do in a much shorter time frame as opposed to pure production where you're manufacturing components yourself, or you're changing your supply chain to more domestic type supply. But what we've seen is a lot more willingness of making investment even beyond the manufacturing capacity in the short term.
Fastenal has refocused on growing with larger customers. What are the key drivers there, and what additional investments do you need to make to enable growth with those customers?
Yeah, so a position we've put ourselves in for a number of years is we have very aggressively made investments, and this was starting back 15 plus years ago, of slowly building an infrastructure to move the supply chain closer and closer to the point of use. And what that involved for us is investing in a tremendous amount of vending infrastructure, and in more recent years, a lot more RFID type infrastructure to measure product movement within a facility, so that you don't have to with human capital, physically observe product being diminished. You can monitor it electronically and remotely. And so we've made extremely large investments over the last 10 plus years in vending technology. And I'm pleased to say that vending technology is all manufactured in the United States.
Yeah, I was surprised when I went to your website earlier, as I was preparing for this, to see those vending machines. It's not something that I've run into certainly in my life, but it's pretty cool to see that.
Yeah,
not just soda.
It's a snack machine.
Yeah,
essentially.
That's what I was thinking. It's like, it's a snack machine, but you can't eat what's in there. So
exactly.
Right? Okay. Hey, we just got about a minute left, and I just want to talk numbers real quick. Gross profit up 45.3%, up from 45.1% over the second quarter of last year. You said it was partially offset by higher import duty costs and higher fleet and transport costs. Are those costs, in your view, going to stabilize?
They're going to continue to rise because of the way our supply chain works. We carry a fair amount of inventory because we have such dispersion in our locations. So we carry quite a few months of inventory. So that's going to keep ratcheting up as we're on a FIFO basis inventory. So as that inventory continues to turn, that will continue to ratchet up a little bit as we move into the third and fourth quarters and into 2026. What really helped us during the quarter and what drove the improvement in our gross margin, set aside tariffs for a second.
Right.
We put in place a faster expansion starting last summer to widen our inventory. And that's really what drove our margin this quarter.
Dan Florness, CEO of Fastenal. Really appreciate you joining us. Shares up today. New all-time highs, 3.8% right now.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App, or watch us live on YouTube.
For years, it was a winning business model. A startup in the U.S. would have a clever idea for the kind of everyday product that everybody else wished they'd thought of first. The design and innovation were American, but the manufacturing was outsourced to a country with much cheaper production costs, such as China, Mexico, or Vietnam. That model was a feature of many of the businesses that appear on the hit TV series Shark Tank, in which entrepreneurs pitch their idea to a panel of potential investors. But now, as President Donald Trump plows ahead with promises to upend trade and force more manufacturing back to the U.S., the Design in America, Made in China model is in doubt. Christina Lindblad is Bloomberg Businessweek Global Economic Editor. She joined Nora Melinda and me to discuss how Shark Tank-like companies are feeling the bite of Trump's tariffs.
Well, I was actually thinking about how I had watched a clip of Shark Tank in which these founders told the judges that they had set up a production line in the United States, and one of them said, "That's crazy," and then...
It is. It is crazy.
And then I thought, how are these companies, so many of them, which follow, this sort of Apple model, designed in California, made in TK somewhere else, cheaper.
Usually China, increasingly sometimes
Vietnam,
India.
Vietnam.
And how are they faring through all of this? Because, they don't have the, lobbying arm, the deep pockets to have their margins be eaten away like this. So we decided to go out, and we went through we cast a whole bunch of companies, and we decided to focus on 4. And we did basically as told tos, so it's like directly from their mouths. And we asked them a bunch of questions about how, what kind of tariffs they were paying right now and what they were looking to do about this. And several of them said that, well, actually, some of them said they had started out making their products in the U.S., but pretty shortly realized that wasn't going to work out. That one of them said the product was so expensive nobody bought it, and that they were contacted by a Chinese company that was already making something like what they made. And then the other thing we heard frequently is that by going to China or going to some other countries, you get like a full operation. Like, you don't have to be. What people were saying is, if you're a small company in the U.S., it's like you're having to watch out over all these there's different parts of production. Like you're importing this and that, and making sure it's all going to the plant. That in China, like somebody was saying, we'll take care of all of that for you. And then also we talked to a person. She makes this little contraption called a click and carry that you snap 2 bags over your shoulder.
It's kind of brilliant.
I bought one immediately after.
Do you like it? Do you like it?
Did you buy it after seeing it on Shark Tank?
I know after
you wrote the story.
Before we wrote the story, because I read the transcript and I thought, oh yeah, this is like your bags are always sliding off your shoulders when you go to the green market. Anyway, and she said it would take a minimum of 8 months to bring this back to the U.S. and it would involve something like getting a mold maker in China, because there are barely any left here in the U.S., to design the mold and bring it back and forth, the designers would be here, the mold maker in China, back and forth, sent it back and forth for adjustments, right? And finally, once you had the mold, you still have to import the resin, the plastic resin from China. And you'd probably, she said, I'd have to find a factory that had a high degree of automation, so that kind of beats the whole idea of like job creation, for the tariffs. So yeah, it just seems like some of these, the small businesses really have a hard time and right now trying to figure out what's next.
So net, would it be possible for any of these companies that you came across in the casting call to actually do this in the U.S.?
Right now, they said that at the level of tariffs they were facing, and let's be clear, 2 weeks ago when we were talking to them, no, it's not worth it for them. I mean, we could be talking to them if we were to go back to them, who knows, after August 1st.
You're listening to the Bloomberg Business Week Daily podcast. Catch us live.
One thing that we've been talking about quite a bit over the last few months is, okay, who eats these tariffs? And the picture that we've gotten from talking to different CEOs is sort of like everybody in the supply chain. So our earnings will take a hit. We'll absorb some of them. Maybe we'll raise prices. Consumers might pay a little more. That's for big companies. What about for these tiny companies that are watching every cent?
Well, I mean, there's one woman, the founder of Click and Carry, she was saying that, she actually had taken out a loan and sold out a bunch of stocks in the fall because she had been selling online and she was actually starting to sell through retailers. And she's saying, well, I approached all these companies with a certain price. This is what I told them, like, I can provide this to you for this price. But now, with tariffs, I'm going to have to go back to them, and quote them another price. And she's scared, that some of them will drop her product because they've only started carrying it a few months ago. And some of them she hasn't even gotten in. I mean, she has enough, I think, to supply everyone, all the contracts that she has through early summer. But yeah, a lot of companies were talking about how the uncertainty towards the back end of the year when they're having to restock.
Yeah, like we spoke to Levi's CFO, and they said this in earnings too, that about roughly half of their inventory for the remainder of the year is already in the US.
Right.
So that's kind of free and clear at this point.
Oh, most definitely. But I know you mentioned earlier, you were talking about a company that you said they were wanting to pass on some of the tariff impact toward the customer, but customers are just unwilling to pay.
Yeah, I mean, I think if you're a young business and you have your foot in the door with some of these retailers, and you don't have a long relationship, you're going to be really scared to do that. So mostly we heard the story sounded like it was going to be the importers eating the tariffs. I mean, I think there's a misconception, largely because of the way the White House talks about this, that it's the exporters eating the tariffs. And, we did hear stories at the beginning of Walmart pressuring Chinese suppliers to lower their prices in order to compensate for the tariffs. But even there, we heard that many of them were saying no. I mean, a small company just does not have that kind of leverage, really. So
what are people, I mean, you cover the economy more broadly. So just outside of this story, if we were to just bring in a broader context, what are people saying about the impact of tariffs on the U.S. economy?
We haven't seen it in inflation yet, although I think we have a print this week, which
tomorrow,
which may throw some light on all of this. I think it could be, a lot of people say, because of this dynamic in which many people knew tariffs of some level were coming right after Trump was elected, right? And there was this big bump, the surge in imports. We haven't seen costs go up because of that, because people are selling down the inventory they already have. I do think there's still a lot of question marks. And also there's been, this kind of whack-a-mole effect where it's just sort of like, okay, it's going to be 145, but now we're going to suspend it. Now we're going to throw it to August. I'm personally really interested in looking at investment figures at some point. Mm-hmm. I suspect that this year may be one of the lowest, may show a big fall off of corporate investment around the world.
Which is not exactly the opposite of what Trump, the president, wants to see.
He'd like to see more investment in the
US.
U.S., but I think the uncertainty is just leaving companies kind of probably saying, I'm going to sit it out.
So that's what I wanted to talk about. You mentioned the whack-a-mole. Is it going to be 145%? Is it going to be what was on Liberation Day? Do you have to wait and see what the letter says on Truth Social to understand what the effect of tariffs is going to be on the country that you manufacture in? Does it mean that there's sort of a stasis here with these small companies that you talk to, or are they plowing ahead and moving forward?
One of them is fortunate and has suppliers in many different countries, and they sound like, and they were lucky. I think it was, Turkey was their main supplier, and that wasn't one of the countries that had, the thing is, we're going by what Liberation Day, like the charts, and Turkey wasn't, very severely affected, so, but you never know. Because now we're seeing duties used for purposes other than just delivering trade deals, in the case of Brazil.
Yeah.
And Bolsonaro and Trump's friendship with Bolsonaro. Mm-hmm. So that's been an issue where, we're seeing tariffs.
Just to clarify that, he basically said that this was not about the trade deficit because we have a trade surplus with Brazil. Instead, this is a punishment for the way that Bolsonaro is being treated and prosecuted by the current president.
Yeah. So the story talks about the fact that some founders are saying that they'd like to get some sort of notice, even a 90-day notice. Talk to me about that. What are they thinking?
That was interesting. I hadn't heard that before. People were talking about getting an advance notice about when tariffs. One person said just like an advance notice and when tariffs are going to go up. Another one said can get an advance notice if like there's a group A of countries, those tariffs will go up and these will go down. You can't really wage a trade war like that, though. I don't think, So, we're certainly maybe you can, but certainly not how it's being waged now. I just think it's just like a difficult time for people to make decisions, and what came through is they wish they had more wherewithal, to like adjust. And also, you're talking about small businesses sometimes with some of the people we talked to had less than 3 people full-time staff, you know?
Yeah, they're shipping one container of something at a time.
Right, exactly.
Which is a tiny portion of what you see on a cargo ship.
Yeah, I mean, we had one person who we didn't end up, choosing for the package, who had to go back to her old job, So, yeah.
Well, it's a great piece, Christina. I encourage everybody to check it out. It is in Bloomberg Businessweek. Christina Lindblad is the editor of it. She's global economics editor for Bloomberg Businessweek. She's also the brains behind the idea for it. So everything Shark Tank, address those questions to Christina Lindblad.
Okay, I got to tune in.
You got to tune in, or you just got to read everything in Bloomberg Businessweek, and then you can get the update.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App, or watch us live on YouTube.
From navigating tariff uncertainty to navigating tariff costs at the ports, being a customs broker used to be a pretty straightforward, low-drama gig, at least according to Jonathan Lieberman, president of New York Customs Brokers. It specializes in seafood. Maybe there was the occasional emergency, such as the shipping container of crocodile meat that he had to send back to Australia because of insufficient paperwork. But most nights, he could make it home in time for dinner with his wife and 2 young children. After so-called Liberation Day, everything changed, so writes Stacey Vanek Smith for Bloomberg Businessweek. Stacey is the co-host of Bloomberg podcast Everybody's Business. Check it out, new episodes every Friday. Stacey joins us from New York. Stacey, I want to start with just what exactly a customs broker does.
That is a great question. Before I started the story, I didn't know myself. A customs broker is kind of a facilitator. They kind of help to guide products into the country from overseas. They take care of the paperwork. They know about regulations. In the case of New York customs brokers, like you were saying, they specialize in seafood. There are all kinds of sustainability laws, NOAA, FDA regulations to navigate, as well as tariffs. So they kind of help facilitate all of that.
So everything was kind of fine and normal until April 2nd. Then what happened? What did he start to hear from customers?
Well, it was so interesting. So I guess normally, we've had almost no tariffs, a lot of free trade mostly for decades and decades. And so it was a pretty straightforward job. But all of a sudden with Liberation Day, all these different tariffs for all these different countries. And, seafood comes from all over the world. So he's been dealing with dozens and dozens of countries and dozens of places all over the U.S. importing these fish. And, he said all of a sudden everyone was calling, wondering, well, if I get the fish from here, but they're filleted here, what does that mean? I mean, people were just panicked because the margins are not huge for seafood. And so, a lot of times, like something like shrimp, there was a big box of shrimp in his office when I came that day, a big box of frozen shrimp in his office. Something like shrimp, a 10% tariff can completely wipe out the profit. So they were really panicked and just wondering what the rules even were.
How has it changed his job itself? As Tim mentioned at the top of the show, he used to be able to just make it home in time for dinner, but now he seems to be spending a lot more time at work. Really, how has this specific role just gotten so much more stressful and more difficult post-Liberation Day?
Well, for a couple of different reasons. So initially, it was just a lot of paperwork, kind of keeping track of shipping containers, occasionally going out to his offices right by JFK Airport, occasionally going out to the airport and sort of checking on a shipment. Now it's just much different because he's got people calling him at all hours asking about rules. Also, the Customs and Protection Bureau is just issuing all of these new directives and rules all the time, like multiple times a week now. Apparently that almost never used to happen. So he is trying to communicate the rules changes to customers. And also there's just a lot of confusion over when the tariffs actually hit, how much they are. So he's getting calls. And these are very high stakes deals for a shipping container full of like lobster tails. That can be almost $1 million worth of lobster tails, in which case a 10% tariffs, like $100,000. This is just so much money for these companies. Oftentimes they don't know how to find it, how much time they have. things, I mean, they used to actually pay the customs brokers, they used to actually just cover the tariffs for their customers because they were so tiny. And now, the tariffs can be upwards of $100,000. So he's helping them to calculate that. He's answering all of these calls. There's a lot of confusion over when the rules will change. So he's answering that. And then just the paperwork itself is a lot more complicated. He has to make sure that he's getting this right. There's not a lot of time to waste when you've got seafood sitting there waiting to be shipped. So he's trying to keep his clients updated on the rules. He's trying to answer a bunch of questions like late into the night, and also just keep the shipments moving as much as possible.
We've heard from the president repeatedly that the countries themselves are paying these tariffs. Based on your reporting, did you find that to be true?
That is not true. So the importer of record pays the tariff. Now, in some cases, the overseas companies will also be the importers of record. Sometimes they will do that. So sometimes that is actually true, but it is always the importer of record who pays the tariff. So if you've got, a seafood restaurant importing a lot of seafood, they are paying the tariffs.
Did you get a sense at all in your reporting about just when the uncertainty is going to ease? Of course, we had the initial deadline. Now we have this August 1st deadline of when all these deals, need to be completed. But from your seat, does it seem like that initial tariff Liberation Day induced shock that kind of spread across markets and economies, has that cooled off?
No, this was, I think, the most striking part of my reporting is just there is so much uncertainty and uncertainty about the uncertainty, I would say. I mean, I spoke with one of the companies that works with Jonathan Lieberman, who uses him as their customs broker. It's one of the biggest. It's called Sensi is the company. It's one of the biggest seafood importers in the country. The owner, one of the presidents of the company said to me, he's like, how do you run a business if you don't know what the costs are going to be? He's like, I don't know what they're going to change, when they're going to change. He was stopping shipments. He had stopped a lot of the shipments from China just because there was so much uncertainty around that situation. The costs were potentially so high. There's so much uncertainty, and there's not even certainty about when we will have certainty. And I think it's just making it so hard for businesses to plan anything.
So enter the magic 8 ball. This is not a joke. There's a magic 8 ball in your story.
This was one of my favorite. Every once in a while when you're a reporter, something happens that feels a little magical. But I went into Jonathan Lieberman's office. Like I said, it's right by JFK. And he had all the stuff you'd expect. Huge customs book. It's 1.5 feet thick of every different possible product, files, computer. And then there was a magic 8 ball on his desk. And of course, I asked about that. I assumed it was from his children or something, but no, he bought it right after Liberation Day. He was taking calls after calls from clients he'd had for decades. They were all panicked, wondering what was going on. And he said he kept saying over and over, I wish I had a crystal ball. I wish I had a crystal ball. And he said while he was talking, he just impulse ordered a magic 8 ball off of Amazon.
I wonder
so now he says somebody just shakes it up to see, to answer questions. And when I was there, he shook it and it said Outlook hazy, which seemed appropriate.
This magic 8 ball likely was not made in the U.S. and probably would be subject to import.
It was, in fact, made in China.
It was.
Yes.
Okay.
He looked it up.
Well, there you go. The amazing reporter, Stacey Vanek Smith, writing for Bloomberg Businessweek. You can check out her story now on the Bloomberg terminal. It's about customs brokers. It was a low-stress job, not so in the age of tariffs. Also, check out Stacey's podcast, co-hosted with Max Chafkin, Everybody's Business. New episodes come out every Friday.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Bitcoin hit an all-time high this past week to start what crypto enthusiasts and the Republican majority in the House of Representatives have dubbed Crypto Week. After an initial roadblock from some conservative holdouts, ultimately the House passed a series of crypto-friendly bills. A huge win for an industry that poured millions into last year's elections to promote pro-crypto candidates. Now, one of the Trump family's crypto ventures has received key behind-the-scenes help from the world's largest digital asset exchange. whose founder is a convicted felon now seeking a presidential pardon. And critics say the relationship poses a conflict of interest for President Trump. So writes Bloomberg News investigative reporter Zeke Fox. Zeke is also the author of the book Number Go Up, Inside Crypto's Wild Rise and Staggering Fall.
Yeah, so this is it's a pretty complicated story, but I think it's an important one. So the Trumps, while Donald Trump was running for president, started this new crypto company, which they called World Liberty Financial. And the way this company's set up, at least at the beginning, 3/4 of all the money that came into this company was paid to the Trumps as just a licensing fee. So they've made tons of money off it, something like $300 or $400 million. But as is so often the case in crypto, when they started this company, they didn't really know what it would do. There was some talk about it being like a borrowing and lending platform, but the company had very few coders on staff. They didn't really have a team commensurate with all the money they raised, so they needed a product. And what we reported was that they decided to make a stable coin, like a cryptocurrency that's always worth $1 because it's backed by real dollars in the bank. And when they went to go make this stable coin, because they didn't have a lot of programming talent, they called on Binance, the biggest crypto exchange owned by CZ. And what we reported is that Binance actually wrote the basic code that powers the World Liberty stablecoin, USD1. And so also, conveniently for him, CZ, who was only just let out of a halfway house last year after pleading guilty to these money laundering violations, is seeking a presidential pardon. So his company is helping out the Trump's venture while he also is looking for this favor for himself.
So this is one of many cryptocurrency ventures that the Trump family has, right?
Yes. I have actually lost track of how many there are. You
need a whiteboard.
Yeah,
I know.
It's so confusing that they actually got kind of confused themselves the other day.
Oh, wow.
Now, the Trumps have a meme coin, Trump coin. Those guys announced that they were going to make a crypto wallet, and the Trump sons were like, this is not an official Trump project.
Oh.
These guys can't even keep straight how all their different crypto ventures.
Is that unique, though, to this Trump coin? And just this is a little aside. Whether we're talking about, I think there's a cologne that I saw recently. There are the shoes. There are the Bibles. This is all licensing, right?
Yeah.
Is that any different than what the Trumps are doing with crypto?
So at first, I think it's quite possible that when they got into crypto, they did even work with some of the same guys that they'd worked with on some of these more traditional licensing deals. Maybe they thought it was just another thing where they might make, $1 million here or there by licensing their name. But it's turned out to be on a totally different scale. Just since Trump has become president, I think Bloomberg Billionaires estimates that he's made $600 million off these different crypto ventures. And it's become a way that anybody in the world, even people who are citizens of other countries who couldn't donate to his campaign, can just give him money.
Wow.
There's another crypto billionaire named Justin Sun bought 75.
You might know him as the banana guy.
Yes, best known for paying $6 million for a banana and then eating it. It's modern art. He bought $75 million of World Liberties tokens, and he had been facing a fraud lawsuit from the US SEC, and that was later put on hold. And I should say that all these people I've mentioned have all denied that anything untoward is happening, and they're saying hey, I just want to invest in these coins, and it's not related to whatever business I might have with the government.
So all these crypto ventures that we said may not even fit on a whiteboard. If we rewind back to 2021, Trump was anti-crypto, correct? I'm just trying to catch up here.
Yeah, he said it was a scam. I think he said maybe it's all made up.
Scam against the dollar.
Yeah, and his first administration initiated some of the lawsuits that crypto guys have been so up in arms about. But it only really changed during this most recent campaign. And there was a very concerted effort, mostly by a small group of rich Bitcoiners, to get Trump on board. They got together and donated something like $20 million to his campaign. It was a fundraiser at the Bitcoin convention, the annual Bitcoin convention. And they had the fundraiser, he raised the 20 million. Then he went out on stage in Nashville and gave this speech in which he totally changed his position and said, Bitcoin's going to the moon. I want to lead the way. Let's make this a crypto capital of the world. It's really an amazing triumph of lobbying.
On the Binance story, we should note a Binance spokesperson didn't respond to questions about the coding helper investment deal, but said USD1 followed the exchange's, quote, standard listing process. A White House spokesperson declined to comment for the story. A spokesperson for World Liberty didn't respond to specific questions about the company's dealings with Binance, but said in an email, quote, your assertions are factually deficient and designed to further a political agenda.
Yeah, I mean, this is like quite controversial, so I can see why people aren't talking about it. You know, this work that people familiar with the matter told us that Binance did for World Liberty was not disclosed at the time. And we also reported that Binance has done other things to help World Liberty. One of them was so the World Liberty is a stable coin.
Yeah.
People have to use it for the company to make money. And the more people want, the bigger this pile of stable coins get, the way the company makes money is earning interest on that. So right now, of all the USD1 coins that exist, most of them are actually held by Binance. So there's more than $2 billion of USD1 on Binance. And the interest income that generates, a lot of it goes to the Trumps.
But does the USD1 that is it World Liberty Financial? Is that right? Again,
yeah, they're the issuer of the stablecoin.
Well, let's just call it this: is the Trump family stablecoin a competitor to Circle stablecoin and a competitor to Tether?
Yes.
Okay.
And even right now, the House is going to take up the Genius Act, and they're calling it Crypto Week. They're going to debate the rules that are going to govern these stablecoins, and like the rules they set might be more favorable to one or another of these companies.
So Zeke, in this story here, we have CZ who pled guilty back in 2023 to failing to maintain an effective anti-money laundering program. Now he wants a pardon. Trump's the only one that can give it to him. Is he the only one still caught in the crosshairs here? Binance has paid his fine. He's done his time. Having this criminal record could make it difficult Binance is the biggest exchange. It's huge worldwide, but they've never really been able to establish a foothold in the US. And the owner of the company having pleaded guilty to a serious felony could make it difficult for them to get the required licenses here. So if that were wiped away, they might be able to compete in this like giant market. And like you said, the other big companies in crypto, like Coinbase, they were facing serious lawsuits under the Biden administration. Those have been dropped. Pretty much everybody in crypto has been given the go-ahead under Trump.
I got to ask, because your book is called Number Go Up: Inside Crypto's Wild Rise and Staggering Fall. You published it at a time when it was crypto winter. How are you thinking about what you've learned over the last 2 years, and if that changes the narrative of your book at all?
Yeah, I mean, I definitely should have picked a different subtitle for the book, given that like crypto is always on these boom and bust cycles. But I mean, what I've seen in this last like crypto recovery is actually nothing that's changed my mind. If anything, it's become easier to raise money for crypto projects that have no point at all. Like this Trump meme coin, They're not even claiming this is going to revolutionize finance. They're just like, hey, Trump's famous, buy this coin. And then lots of people are piling in. It's like the GameStop mania or something.
So, look, I'm not going to ask you to predict the future, but do you think we're still in a boom-bust cycle and this is a boom?
Oh, yeah. I mean, even people in crypto, I think, are mostly saying this can't go on forever like this. I mean, eventually, like with all things, I think that the value has to come from actual usage. It has to have real world applications. Now, these laws that are being debated might make it so favorable, end up so favorable for the industry that people will be incentivized to use crypto who might not have otherwise wanted to.
Zeke, always good to see you. Congratulations on this story. Everybody read the book. It is a great book. Zeke Fox is investigations reporter for Bloomberg News. He's also the author of Number Go Up, Inside Crypto's Wild Rise and Staggering Fall.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business App. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.